Guys, this is S&P 500 weekly technical analysis for the week of May 27th. And it will be a short week because Monday is the holiday. Now, in the previous week, only on Monday, S&P 500 formed or given a green candle. Otherwise, for the next 4 days, continuous decline. But this was not surprising because we knew that the S&P 500 is going to come down. And this was my previous S&P 500 weekly technical analysis for the week of May 19th. And here I mentioned absolute saturation. And because of absolute saturation, any more bullish movement is not allowed. And as early as on Monday, if not then on Tuesday or by Tuesday, we will see the decline in the S&P 500 or in the entire market. And this decline is expected to happen or is expected to be seen through the profit booking. And for the entire week, S&P 500 is expected to trade in between 5,600 and 6,000 range. So now the first thing is clear. We knew that there will be a fall. Now, where is the profit booking? So for that, you need to understand, for the profit booking to happen, S&P 500 was supposed to lose 590x. This was a compulsion. Without losing 590x, no profit booking. And exactly the same I mentioned here in the pre-market analysis to my Patreon community members on Monday. For any bullishness to be seen or to happen, the SP500 must not lose the 590x. And as long as S&P 500 is sustaining above the 590x, no bearishness, no fall, rather it will be in a condition to move up to the confluence zone. On Monday, S&P 500 hit the absolute saturation on the second consecutive day. It also tested the confluence zone and it failed at the confluence zone. But again on Tuesday, the S&P 500 never lost the 590x strong support. The low was 5909.26. It never tested or lost the 590x. That is why it managed to sustain. So now it was clear that the market is under pressure. And exactly the same I mentioned in the midday update on Tuesday to my Patreon community members, that see, these are the conditions and now it is going to sustain above the 590x level. So in this manner, the S&P 500 prepared for the fall on Monday and Tuesday. And then we have seen around 12:40 p.m. or 12:45 p.m. Eastern time on Wednesday, a sudden fall. Because of that sudden fall, S&P 500 hit and breached the 590x. And then in my second update to my Patreon community members, I mentioned that there was a sudden and heavy selling, 1% loss. The most important part is that it lost the 590x, which was helping the S&P 500 to sustain in the bullish side. This was the key level. This means that this is the case of the profit booking. And why the profit booking? Because all stop losses are going to hit and that will trigger more and more fall. And only the zone, the 585x, the zone that starts from 585x, will be able to hold the fall after 590x, otherwise nothing will. So it was very much clear on Wednesday itself that either on Thursday or by Friday it will come and test the 57879x zone. And on Thursday, the S&P 500 was supposed to remain weak and would have trade bearish, and exactly the same was mentioned here, that S&P 500 is now going to trade in between 582x, okay, my calculated level, and the zone that starts from 585x. However, irrespective of anything, the S&P 500 will either test the 5787/9x on Thursday. If not, then on Friday it will test this the zone. And in the final update on Thursday, I mentioned that the next day, if the S&P 500 closes below the zone that starts from 585x, then the next day we will be anticipating a gap down open, or irrespective of any open and initial or intraday bearish movement on Friday. Now, why I have mentioned here the bullish spark? The reason is that on Tuesday we are anticipating a gap up open, or irrespective of any open and initial or intraday bullish movement. That will be the bullish spark. Okay. Now, bearish change. Now, what is this bearish change? On the daily charts, it is going to change to the bearish side as early as on Tuesday. Okay, and once that happens, then we will see more and more pressure. S&P 500 will be coming down. That is why I mentioned 5,500 to 5,900 will be the range for the next week. So how it is going to work, how the bullish spark is going to work, how the bearish change is going to work, and when can we expect 5,500. So I'm going to discuss all of this in detail in this S&P 500 weekly technical analysis. So guys, before I discuss the weekly chart section, let me tell you that I have divided this S&P 500 weekly technical analysis in three parts. The first part is the S&P 500 technical analysis on the weekly chart. Weekly chart is the big picture, the long-term picture, the trend. So far, the trend is neutral now. This is the biggest change. The trend is neutral on the weekly chart. Okay, but on the daily chart, it is turning bearish. Second point is the S&P 500 technical analysis on the daily chart. On the daily chart, it is turning bearish and it is expected to enter into 5,500 range. Third point is the probable movement of the SP500 from May 27th, which is Tuesday, through May 30th, that will be Friday. Whatever is going to happen, just like last week I mentioned that there is a saturation, there will be a fall, there will be the profit booking, the fall, but the fall will be limited to the zone. Okay. Similarly, I will tell you that what we are expecting in the next week to happen, whether it will move up and will continue to move up, or it will move up a little and then it will fall. Okay, these are the conditions. And guys, if you are new to my channel, then let me tell you that all of these three sections are interrelated, are interconnected. Okay, so when I say the probable movement, this does not mean that I am going to discuss the probable movement only in the last point. I am going to discuss the probable movement 30% to 40% in the first and the second point. That is why it is highly recommended that you should watch all of these three sections in order to understand what is going to happen in the entire US stock market in the next week and why that will happen and how that will happen. So now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay. Now let's first discuss the candle. This last candle of the S&P 500 on the weekly chart, if you notice, it's a heavy bearish candle. Why I am saying heavy bearish candle? You can notice the wick. Okay. And then you can notice the closing is below the open of the previous candle. Although it is not an engulfing, but because it is heavily bearish, it is simply indicating that we are expecting more fall. We are expecting more fall in the S&P 500 at least to 5,600 range. Okay, but whether the 5,600 range will come into the picture or not, it will depend on 5787/9x. This is the zone. There must come one closing below the zone so that it can be confirmed that more fall will be there and that it will enter into 5,600 range. Okay, so fall. Now this candle does not indicate a gap down open on Monday or a gap up open. It simply indicates that on Tuesday, May 27th is Tuesday. On Tuesday, irrespective of any open, there will be an initial or intraday bearish movement. Okay, this can continue for the rest of the week until Friday, that will be May 30th. However, many things are going to happen, including the Nvidia. Nvidia is going to release the earnings. Then the GDP data will be there Friday. Then the FOMC minutes of the meetings is there. Then Friday the PCE data is there. Okay, a lot of events are scheduled for the next week. Through the candle on Tuesday, initial or intraday bearish movement. Now let's discuss the weekly candle of the Dow Jones. The weekly candle of the Dow Jones is really very heavy. Okay, but because the close is not equal to the low and also it managed to close above the moving average and also my calculated support level, that is why a gap down open is not expected. Okay, but yes, irrespective of any open on Tuesday, an initial or intraday bearish movement will be there on Tuesday. Okay, So now both of the candles, the Dow Jones candle, weekly candle, and the S&P 500's weekly candle is indicating that on Tuesday, irrespective of any open, there will be an initial or intraday bearish movement. Initial or intraday bearish movement. Okay, so just remember this part, because on the daily chart I will show you and I will tell you that we are expecting a gap up open just opposite to this the movement. Then how exactly it will work, because both of these conditions must be fulfilled, bearish movement and as well as bullish movement. So how exactly it is going to work, that I will tell you in the daily chart section, and then in the third part in the probable movement. Okay, so weekly chart, and once again let me remind you that weekly chart means the big picture. Okay, the long-term picture, the big picture. That is why whatever happens on the weekly chart, the candles of the weekly chart, okay, whatever is seen through the weekly chart is always will get preference. Okay, the daily chart will be the second. Okay, now let's talk about the technicals. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market, then you can join my Patreon community, where you will be getting all of these daily precise updates every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day. Now let's analyze the technical indicators. A big change in the technical indicators. If you notice, the S&P 500 is bullish through the Ichimoku cloud on the weekly chart. The S&P 500 is bullish through the Bollinger Bands on the weekly chart. The S&P 500 is neutral through the moving averages on the weekly chart. And now the big change is in the MACD. The MACD is now bullish. So S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. Okay, it is neither overbought nor saturated. Okay, so all of these conditions indicate that the S&P 500 is neutral. Until last week it was bearish, but now it has entered into the neutral trend. Okay, more into the bullish side, neutral but more into the bullish side. Okay, now even though most of the technical indicators are bullish, means S&P 500 is bullish through most of the technical indicators on the weekly chart, then why I am saying neutral? Again, the same reason, the moving averages. Because if there comes a good fall in the next week, then there will be a bullish slip through the moving averages on the weekly chart. In that case it won't matter that what other technical indicators are doing, because eventually the S&P 500 will see back-to-back fall for next 2 to 3 weeks. Okay, weekly candles, we can expect red candles, fall every week, fall. Okay, so that kind of movement. So it is neutral. S&P 500 is neutral on the weekly chart. Now let's see what is happening on the Dow Jones. Dow Jones, Dow Jones is neutral through the Ichimoku cloud. Dow Jones is neutral through the moving averages. Dow Jones is bullish through the Bollinger Bands. Dow Jones has failed to give a bullish crossover the moving averages. Sorry, in the through the MACD. No bullish crossover. So Dow Jones is still bearish through the MACD stochastic. So Dow Jones is bullish through the stochastic RSI. Okay, Dow Jones is not in a good shape. It is not in a good condition. So the Dow Jones will be seen or considered as like 70% bearish. 70% bearish, not neutral, not bullish, 70% bearish. Okay, and it will be the Dow Jones. Okay, the fall that will happen, it will be because of the Dow Jones, the continuation of this, the bullish, the bearish movement. It was like this, then this, and then this. Okay, so this means that in the next week Dow Jones must improve. Dow Jones must improve, and Dow Jones at least it must get a bullish crossover. Means there must come a bullish crossover in the MACD of the Dow Jones in the next week. If it fails to get a bullish crossover through the MACD, okay, in the next week, then we should be ready for more fall. And then that fall is something that we were expecting, like 15% to 20% fall. Okay, so that much fall it will be there, okay, in all of the indices. So the Dow Jones is 70% bearish on the weekly chart. S&P 500 is neutral on the weekly chart. But because, see, this is how the indices are arranged: Dow Jones, S&P 500, Nasdaq. First preference is Dow Jones, second one is S&P 500, third one is Nasdaq. Okay, whatever happens in the Dow Jones, that will be reflected on the S&P 500 and the Nasdaq, whereas whatever is happening in the S&P 500 and in the Nasdaq may or may not be reflected on the Dow Jones. Okay, this is how the indices work. So this means that if there comes a fall, a good fall in the next week, then a few conditions will be fulfilled. Okay, number one, that the bearish slip through the moving averages will be there in the S&P 500. Number two, the MACD of the Dow Jones, okay, will not give a bullish crossover, rather it will remain bearish. And both of these conditions are absolute bearish. This means that irrespective of anything, if the S&P 500 want to sustain, if the Dow Jones want to sustain, then in the next week there must come a normal or a good bullish candle, good green candle, so that there will be a sandwich pattern. A sandwich pattern like this was the green candle, this is the red candle, and now there comes another green candle. Okay, so it will be a bullish sandwich. Bullish sandwich means it will allow more bullish movement. Okay, now it will get an early confirmation and an early support through the daily chart. Okay, because the daily chart is supporting a gap up open, or irrespective of any open and initial or intraday bullish movement on Tuesday. But guys, if you are my Patreon community member, then you need not to worry about anything, because every day I give you these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market. And guys, if you have not yet joined my Patreon community, then let me tell you that I gave the pre-market analysis. Pre-market analysis is given at least 1 or 2 hours before the open of the stock market. Then comes the midday update. This midday update is given after 3 hours. Then comes the final update. Final update is given 1 or 2 hours before the closing of the stock market. And guys, it is not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give the stock market opportunities in the premium stocks of the US stock market, top 30 or 40 companies of the US stock market. And I give minimum 5 to 10 opportunities every week in these the premium stocks, the blue chips. And that's not all, because I also give this the mid-week update video. This is the mid-week, so it's basically a technical analysis, a video technical analysis, just like the weekly technical analysis. It is given either Wednesday or Thursday, and through this video technical analysis I tell my Patreon community members what is going to happen, what are the levels in the bearish side, in the bull side, how exactly it is going to move, whether it will sustain or if it will fall, each and everything in detail. So guys, if you also want to get these daily precise updates of the S&P 500 every day from Monday through Friday, and the stock market opportunities and the midweek update, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon profile, you will see these 3 levels: level 1, level 2, and level 3. So other than the geographical location, there is no change. When you subscribe to either to level 1 or to level 2, then you will be getting all midweek update videos, which I publish every Wednesday or Thursday. Then the daily SP500 analysis, updates, movement, levels, momentum, zones, opportunities. Then the stock market opportunities, minimum 5 to 10 every week. And guys, this level 3 is very special level, because when you subscribe to this level 3, then you will be getting whatever you are going to get here in level 1 and level 2. By default, you will be getting the all midweek update videos, daily precise SP500 analysis updates, movement, levels, zones, stock market opportunities, minimum 5 to 10 every week. But other than that, you will be getting entry and exit secrets. Okay, what is the best time to enter? What is the best time to exit? How to maximize your profits? How to minimize your losses? These secrets. And one premium hack. This hack works almost 100% of the times with almost 100% accuracy. Okay, so you might not have seen or heard of this, the hack. Then one trading or options strategy. Again, this trading or options strategy works with 100% the accuracy and almost 100% of the times. Then the modified technical indicators. So I have modified my technical indicators in order to predict the movement or predict the change even before it happens. So I will share those technical indicators, the modified values, okay, here. Then the options premium calculator, and 97 to 98% options traders who are trading in the stock market, they are trading blindly because they do not know how to calculate the options premium value. Okay, but here I will tell you, I will teach you how to calculate the premium value of any option, and all of this will be delivered through one-on-one Zoom video meeting. So it will be just one-on-one, just me and you, and in that the Zoom video meeting I will teach you all of these. So in this manner, this level 3 is very special because you are going to get much more than what you can expect or what you can anticipate here in this level 3. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates, the stock market opportunities, the mid-week update, each and everything, every day, every week. So guys, whenever you want to join my Patreon community in order to get all of these, the precise updates, opportunities, and the mid-week update, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. Okay, so here I will do the technical analysis of the S&P 500 on the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay, now let's first analyze the candle. If you look into this candle, then the closing of the candle was above the low of this candle that was formed on 12th of May, and there was a gap. Okay, this is the gap, but here the most important part is the low of this candle, that was 5786 5786.18 or .08, indicating that the S&P 500 want to sustain. Other than that, it's a technical bullish candle in nature. Okay, all of this indicates that on Tuesday will be the first working day. Okay, so on Tuesday we are anticipating a gap up open, okay, or irrespective of any open and initial or intraday bullish movement on Tuesday. Okay, now let's look into the Dow Jones. The Dow Jones, if you notice, the most important part is that the Dow Jones managed to close above these two moving averages, and also Dow Jones managed to close above my calculated heavy support level. Okay, and when it was coming down, then back to back it was showing reluctance and formed, okay, these the candles. So this again indicates a gap up open on Tuesday, or irrespective of any open and initial or intraday bullish movement on Tuesday. So now both of these, the S&P 500 and the Dow Jones, are indicating the same thing, and also we are seeing the same in the Nasdaq, okay, QQQ, okay, and these the ETFs also. So what does this mean? Okay, because now here you also need to understand that on the weekly chart we are anticipating an initial or intraday bearish movement. Okay, no gap down open through the weekly chart, only an initial or intraday bearish movement. But through the daily candles we are expecting a gap up open, or irrespective of any open and initial or intraday bullish movement. So what does this mean? This means that on Tuesday, okay, even if there comes a gap up open, then also S&P 500 and Dow Jones will be in a condition to come down. Okay, come down to the closing prices of towards the closing price of the previous candle. Okay, Means this candle, for example, S&P 500 has closed at 5802. Okay, so there will be a gap up open, it will come down, will fulfill the weekly chart condition, will fulfill the daily chart condition, and then it is free to move. Means then it is allowed to move bullish or bearish, okay, as per the conditions prevailing on Tuesday. Okay, so if you're my Patreon community member, then I will tell you in the pre-market analysis and also in the midday update, okay, what we are expecting to happen exactly, okay, for the entire day. So this is how it is going to work. Now in the other case, let's say for some reason there comes a gap down open, then what will happen? For some reason there comes a gap down open, then what will happen? After the gap down, the S&P 500 will be in a condition to move up. Okay, in this manner it will fulfill the weekly condition, weekly chart condition and the daily chart condition. The only case, okay, this will be the only case where we are expecting that this condition may not get fulfilled, okay, is that if the President Trump comes up with some new tariff, okay, some idea on the new tariff or more tariff, or increases the tariff, okay, on some countries or the companies, okay, and this tariff is more than what the Wall Street is expecting or anticipating, then this will be the only case that can trigger a fall, wherein an intraday recovery back to 5802 might not be possible. But then on Wednesday there will be conditions when the S&P 500 will be in a condition to move up and to recover and to test the 5802. Okay, so on the same day it might not be possible, but on Wednesday, if everything cools down by 1 p.m. or 2 p.m. on the same day on Tuesday, then by Wednesday S&P 500 will be in a good condition to move towards or to 5802. Okay, so this will be the only condition. So see, you need to understand that in my midday update on Friday, okay, around 12:30 p.m. Eastern time, okay, I have mentioned that if the SP500 closes above the zone 5787/9x zone, at the same time the Dow Jones is closing in between these two, okay, then in that case we can expect bullishness on Tuesday. Okay, bullishness means a gap up open or irrespective of any open and initial or intraday bullishness. Now the technicals will clear the picture more, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community in order to get the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, then I have given the link in the description of the video and also in the comment section. Now in terms of the technicals, the S&P 500 is bullish through the Bollinger Bands, S&P 500 is bullish through the Ichimoku cloud, S&P 500 is neutral through the moving averages, and the big change, okay, if you notice MACD, as of now S&P 500 is bullish through MACD, S&P 500 is bullish through the stochastic RSI, and it is neither overbought nor saturated. However, if on Monday there comes any candle but not the heavy bullish candle, let's say there comes a red candle of any kind, then also there will be a confirmed bearish crossover in the MACD on the daily chart of the S&P 500. If there comes a very small bullish candle, then also there will be the confirmed crossover. Only if there comes a heavy green candle, heavy bullish candle, then only this will not happen, otherwise it will happen. Okay, so once see, as of now the stochastic RSI is already bearish. Once the MACD also turns bearish, then intraday means then on the daily chart we will start to see bearish pressure, okay, means fall, right? So in this manner the S&P 500 on the daily chart is 70% bullish, 70% bullish. And on Tuesday, okay, when the MACD of the S&P 500 turns bearish, okay, then immediately the S&P 500 will turn from 70% bearish to neutral on the daily chart. Okay, neutral and in the bearish side on the daily chart. Now the Dow Jones. Dow Jones is bullish through the Bollinger Bands. Dow Jones is bullish through the Ichimoku cloud on the daily chart. Dow Jones is neutral through the moving averages on the daily chart. Dow Jones is also at the same junction. Okay, Dow Jones as of now is bullish through the MACD on the daily chart and is bearish through the stochastic RSI on the daily chart. But if there comes a red candle of any kind or a small green candle, then 100% a confirmed bearish crossover in the MACD, and we will anticipate more and more fall. Only and only a heavy bullish candle on Tuesday can help the Dow Jones and the S&P 500. You can say like more than 1%, no, not 1%, but I think more than 1.5% bullish movement can help. Okay, will disallow the MACD of the Dow Jones and the and the S&P 500 to not to give a bearish crossover. But in case of the Dow Jones is 70% bullish on the daily chart. Okay. However, Dow Jones is 70% bearish on the weekly chart. Okay. This means that the bearish trend is still there in the Dow Jones. It is not neutral bearish. Whatever bullishness was there or whatever bullishness is there, it is now normal. Once it turns to neutral, then soon it will turn bearish because we will be anticipating more or heavy fall. Okay, this means that as of now the market, the S&P 500, Dow Jones, Nasdaq, or the entire US stock market is in a transition phase. It is coming into a transition phase. Okay, transition phase means that, see, earlier the S&P 500, okay, it was trading bearish, confirmed bearish. Okay, then it moved up and struggled, continuously bullish movement. It entered into the transition phase, then it turned bullish. Okay, now it is coming back, it is entering into the transition phase and then bearish. But because the next week is full of events, Nvidia is there, okay, inflation data is there, FOMC minutes are there, GDP data is there, goods orders data is there, full of events. So we are expecting heavy volatility, okay, and this transition phase to complete within the next week. Okay, so this is how the technicals help us to deduce the trend and to help us to predict even before that movement or the change happens. This is my S&P 500 knowledge transfer program. Okay, so these are technicals and everything. So through this program I teach everything that I know. Okay, whatever I have learned in last many years, okay, through my research and everything, I teach the same through the program, S&P 500 knowledge transfer program. Although the name is S&P 500 knowledge transfer program, but whatever you are going to learn here, it will be applicable to any stock, any index, any commodity, crypto, or anything that is traded in the stock market. So I cover the basics of the stock markets, the movement, okay, and then the modified technical indicators. I share the values and I help you set up your charts, okay. Then the trading strategies, all of the trading strategies, but so you might be aware of these are trading strategies, but the way I'm going to tell you these or to use these trading strategies, it will be entirely different. Then the market analysis, how to analyze the market, where to get the credible information. Okay, then the options calculations and options trading strategies, live options calculations, live calculations through the premium calculator, and I will teach you how to calculate the premium value of any option. Then my calculated support and resistance levels. Then the price prediction, how to predict the limits. For example, on 19th of February, S&P 500 made an all-time high at 6147, and I predicted this range or this price in October 2024, okay, around 4 or 5 months before it was seen. Okay, now recently S&P 500 moved up and I mentioned confluence zone is there. Okay, so this confluence zone, we are expecting it to fail at the confluence zone. Okay, most likely it will fail. Then the trend analysis, how to analyze the trend, how to deduce the trend, the point of entry, the point of exit in the trend. Okay, the reverse engineering through the option data. Then how to recognize the manipulation, okay, how to avoid falling into the traps, then the hacks. And this is my email address. These are some terms and conditions, and these are the snapshots of the meetings. So guys, whenever you want to participate in this program, or if you have any questions that you want to ask, then you can send an email and you can ask your questions, or you can send a request to join or to participate in this, the S&P 500 knowledge transfer program. So I have given the link to this, the Google spreadsheet, in the description of the video and also in the comment section. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. So here I will give you the probable movement of the S&P 500 for the next week. Okay, that is from May 27th, which is Tuesday, to May 30th, that will be Friday. So when I say the probable movement, okay, it is not just restricted to the S&P 500, but it will also include the Dow Jones, or it will be also applicable to the Dow Jones, Nasdaq, and in a manner to the entire US stock market. Okay, so now before I discuss the numbers, okay, the very important events. On Tuesday, the durable goods orders data will be released in the morning pre-market at 8:30 a.m. Eastern time. Now this data will tell us about the health of the economy. Okay, the S&P 500 and the entire market will get influenced by this data, but not much. Why not much? Okay, because on Wednesday, the FOMC minutes of the meetings will be released in the afternoon, okay, around 2 p.m. Eastern time, and the entire US stock market, the S&P 500, the Dow Jones, and the Nasdaq, and all of these indices, etc., are going to be influenced by the outcome of the FOMC minutes of the meetings. Okay, still if the market does not give any good movement, this means that on Wednesday after market hours, Nvidia is going to post the earnings, and the S&P 500 and the Nasdaq, these are the tech indices, means these are waiting for the Nvidia to post the earnings. Okay, so the earnings of the impact of the earnings of Nvidia will be seen on Thursday morning. Okay, now on Thursday morning, the GDP data will be released for the second quarter. Okay, the estimate data, it will be released, and in this manner the permutation and combination of the Nvidia and the GDP data will heavily influence the movement of the entire market on Thursday. Okay, still if something is left, then on Friday the core PCE data will be released. So in this manner the next week is will be heavily volatile, because every day something is scheduled to happen, like, you know, data or the earnings, okay, or these things. Now in terms of the movement, what we know is that, okay, in terms of the movement, let me first create the zones. So this zone is 5787/9x. Okay, so this zone will be responsible for the fall or for a sustained movement, because once there comes a daily closing below this zone, this means that now we are expecting more and more fall. Okay, if the S&P 500 keeps on closing above this zone, then in the bull side it can move up to the zone that starts from 585x. We have seen continuously back to back two rejections, and this was the third rejection. Although it will not be considered as a rejection because it never tested the zone, but these 2 days, the Wednesday and Thursday, okay, 2 days of continuous rejection from the zone. So S&P 500 will oscillate between this zone and this zone. That's it. Okay, in between these two zones. Now that I mentioned, on Tuesday we are anticipating a gap up open, or irrespective of any open and initial or intraday bullish movement. Okay, this means that even in this case, even in a favorable case, S&P 500 will move up and will struggle at the zone. We can see that it has now stuck at this zone. Okay, the 585x, the zone that starts from 585x. So in this the case, let's say S&P 500 moves up, it tests the zone, but closes below the zone. In that case, that will be considered as a rejection. So back-to-back rejections will create more and more pressure on the S&P 500, and either data or earnings. If any of these things comes negative, okay, just a little negative, then we can anticipate very heavy fall. But that fall cannot happen or will not happen until and unless there comes a closing below 57879x zone. There must come a closing below the zone. A closing inside the zone is also supportive, okay, but the situation will remain dicey. Now, what will happen if the S&P 500 somehow, let's say because of earnings of Nvidia, because of some data, or because of the comments of or the comments on the tariffs, okay, favorable comments that like president says that he's not going to impose more tariffs, rather he will withdraw the tariffs or something like that. Okay, in a favorable case, if there comes a closing above this zone 585x, the zone that starts from 585x, then what will happen? In that case, 590x is there. But now, because there are three closings below the 585x zone, the zone that starts from 585x, okay, that is why there are very limited chances for a movement, sustained movement. A breach can happen, intraday breach can happen, not a problem. But a sustained movement above the zone, chances are not much, okay, or the chances are less, okay, or limited, not less but limited, okay. You can say like 10 to 20% chances, okay. So why I am saying 10 to 20% and why I am not saying like 0%? Because the next week is full of events, especially the Nvidia. If the Nvidia would not have been there, then I would have said like 5% chances only. Otherwise 95% it will go down, okay. Otherwise 95% it will fall. So Nvidia is the key factor there. Now you also might want to ask that what if the S&P 500 moves up above 585x? Let's say all of the data, all of the earnings, okay, everything is in favor of the stock market. What will happen? We need minimum two, or in this case, yes, we need minimum two consecutive closings above the 585x zone. Means the zone that starts from 585x. We need minimum two consecutive closings so that it can be said that it is in a condition to sustain and to move up to 590x. 590x, okay, then it will be the next very heavy resistance. If all goes well, everything okay goes well, data, earnings, and also the president says that he's going to withdraw the tariffs and everything is good and good and good, okay, in that case only it will be able to move up beyond 590x, but it will then consume the entire week or by Friday, okay, because we need two consecutive closings, okay, above 590x, okay. So what I'm trying to say here is that in the bull side, okay, the S&P 500 was already rejected by the confluence zone, okay, there was already a rejection. Then it was holding because of 590x, okay, then it came down, it was holding because of the zone that starts from 585x. Then on Friday it managed to hold and sustain because of the zone that is the 57879x, okay. So that is why chances beyond 590x are not much, are not good, even if there comes favorable data, good everything, okay. Only if on Tuesday S&P 500 moves towards or moves to 590x on Tuesday itself, then Wednesday, Thursday, Friday, 3 days will be there. Irrespective of anything, the confluence zone will stop the fall. Even in the best to best case scenario, it will stop this the bullish movement and a rejection and again a fall, okay. So that will be the best to best case. I am saying best to best case, okay, the confluence zone. Otherwise the confluence zone is now out of the picture. So only up to 590x. Now what will happen in the bearish side? Okay, so for now what I'm saying is that there are two zones. A zone that starts from 585x, okay, second zone is 5787/9x, okay. So S&P 500 is expected to oscillate between these two zones, okay. Only a favorable earning or a data, very much favorable earning or data will be able to help the S&P 500 or the entire market, otherwise not, okay. Now this means that either it will move above 585x zone, means we need two consecutive closings. If this happens, bullish side is open, Okay, bearish side will be limited, restricted. Once there comes one closing below the zone that starts from 5787, or this is the zone 5787/9x, one closing below the zone. Okay, this means that the bearish side is now open and the bullish side is restricted and limited. Any bullish movement or any kind of bullish movement will be restricted, even the best to best case scenario will be restricted by the zone that starts from 585x. Okay, so fall. Now when this fall happens, then where the S&P 500 will be coming down to? Okay, the S&P 500 in this case after 5787/9x will be coming down to 571x. 571x is my very heavy level, very heavy support or resistance level. Recently, if you notice, it was this day on 8th of May. Okay, on 8th of May, S&P 500 moved up. Okay, it made a high at 5720. It breached the level at 571x, made a high at 5720, and then intraday fall. Okay, 1% intraday fall, more than 1.2%, and it closed below. So this is why the 571x, okay, is a very heavy support level in this case. This means any fall from 578x, 57879x will be handled by 571x. There is an intermediate support. There is an intermediate support. That support will work. Okay, only if there comes a gap down open on Tuesday. Then that support will work, and then it will be able to push the market up. An intermediate support. Otherwise, 571x is the heavy support level. Now, if the situation does not improve and the 571 is compromised, okay, so we need one closing below 571x. So once there comes one closing below 571x, then where it will be heading to? Then ultimately it will be heading to 564x. Okay, 564x is or the technical obligation to the 564x is still pending. So it will be coming down to 564x. Okay, after 564x, if the fall is good, every day 2 to 3% fall is happening, then it will enter into the 5500 range. And then there is my very heavy support level at 5505x. You will see, okay, very heavy support level. In this manner, okay, we will see this movement to happen. So this means that the key levels are, once again, these are very, very important key levels. And other than these key levels, there is one more, very important thing that is there in the Dow Jones. But guys, before that, let me remind you that this is my S&P 500 knowledge transfer program, and I have given the link to this Google spreadsheet in the description of the video and also in the comment section, and this is my email address. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now in the Dow Jones, you need to understand that Dow Jones is showing reluctance. Dow Jones is hesitating to lose a very heavy support level. Okay, that is why it sustained above the very heavy support level as well as the two moving averages. Okay, this means that even if there comes a fall in the S&P 500, and we might be thinking that it is going to lose the 57879x, but if the Dow Jones is holding the very heavy support level, okay, or these are moving averages, then S&P 500 will not fall. There will be an intraday bullish reversal. There will be an intraday bullish movement. So Dow Jones must give closing, okay, at least one closing below these the moving averages and also my heavy support level, so that the bearish side can be seen, okay, and then we will see very heavy fall in the entire market, including the S&P 500 and the Dow Jones. This means as of now an oscillating movement between these two. Okay, two closings this side, one closing this side. Okay, and then the picture will be very much clear. Okay, but in the pre-market analysis on Tuesday, okay, it will be very much clear where it will be heading to. So this is how it is going to work in the next week. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.